Hey guys, John Brown here with Exploring Park City Living. Today we're going to come to you with another Fed update um, from today's Federal Reserve meeting. They dropped the federal funds rate a quarter percent, 25 basis points. And that was no surprise. That was already priced in and everything. So it all really came down to the meeting and Jerome Powell's speech and kind of what could we pull out of that to see what's going on. Um, and I have to say, this was the most bullish Powell I have seen in a long time. So if that's because there's been speculations that Trump might fire him, so it's kind of like a job interview, like, "Hey, Trump, we're doing good," or was it like actually like bullish? So he did have when asked about if he would step down because Trump's uh, going to fire him. He just said no and cut it really tight. He got asked multiple times. He just shut it down, said no. So he definitely intends to stay and keep his job. So um, about the 10-year treasury, Powell said recent yield moves reflect growth expectations, not downside risks. So yields spiked on bonds, like the 10-year treasury yesterday spiked, which is notable for real estate as mortgage rates are attached to the 10-year treasury. So I'm going to be talking about that a lot because this is a real estate focused channel. And so when he was asked about the yields moving up, he said, yeah, that's more growth expectations than like downside risk. So that's bullish. And I do believe that that is actually what's happening. If you look back at my video I came out with yesterday, that's exactly what I basically said. Said, because of the election outcome. So, and then he is basically saying this could signal a shift on in sentiment, basically tied to Trump reelection expectations and inflation concerns. Exactly what I, you know, said in my last video yesterday. So, but somebody also asked a very good question about how bond yields are rising as you're trying to loosen and cut uh, uh, rates, and bond yields are rising. So doing the exact opposite, tightening monetary policy rather than loosening, right? The Fed's loosening, but bond yields tightening, which is, tightening lending. And it's doing the exact opposite. And I thought that was an amazing question. And what he said is he basically dismissed the bond yields rising as short-term noise and not a sign of fundamental changes in the economy, which is also bullish. And something I did note yesterday, I said bond markets pricing in worst case scenario, and the stock market's pricing in best case scenario. And that's kind of like, it was reactionary. That's what I was saying. And that's kind of exactly what Powell said when he asked that. And then during this whole speech, the 10-year treasury yield dropped 10 basis point or 11 basis point. Let me see. Look. Yeah, 11 basis points as of the time I'm recording this, which is right after the meeting. And so he was definitely talking down treasuries, right? Like everything he shot down inflation concerns, saying that we're we don't have any inflation concerns anymore, and he shut down employment, and so the cooling job market, and he attributed it to hurricanes and national disasters on why the job market has been cooling the second half of the year. And he just downplayed everything there. It seemed like to you know bring bond yields down, talk the bond market down. And he also said GDP growth grew Q3 3.8, same as Q2, and he hinted potentially stronger growth next year in GDP. So like all around, like no worries in inflation, no worries in the job market, and more growth next year. Like, what? Goldilocks scenario, just right there. So key takeaways from this is, if you're bullish, like fully bullish, and then you heard this and you're just like margin all in, like maybe just tread lightly with caution, because there is also like an idea that's floating around my head that, like, if you talk bad, then you will get bad. It's almost like speaking it into existence. It's just a fulfilling. It's just self-fulfilling. If he goes out there and says everything's bad, horrible, everyone's it's like, oh, I'm not going to spend money. I'm not going to put more money into my company to get growth. And maybe I was thinking about firing somebody. I'm definitely going to do it now. Like, no, like when you hear growth and like good things, you're like, all right, I'll keep that employee on. And then, it's self-fulfilling if you say bad things and then people lay people off, and then it just cycles down. So there's like concerns there that he's like being overly bullish just because he sees bad and like doesn't want to self-fulfill it. So if you're fully all in, I would just tread lightly with caution, especially, stock market at all-time highs. But if you're fully bearish, I would also open up to some growth possibilities, just because like he is bullish here, and like that is a part of it. So anyways, he also brought up like, yeah, when 10-year treasury was 5%, everyone was freaking out, and then two weeks later it was 50 basis points down. So he kind of like hinted that is like right now, like, yeah, 10-year treasury is up right now, but like maybe not in two weeks. So it's like, okay, are you saying that the 10-year treasury is just spiking, like, and it will come back down? That's kind of what he said. So I don't know. If I was a betting person, I'd wait a little bit to lock in on a rate. But also, the 10-year treasury just dropped a bunch today, so maybe you take advantage of that, like euphoria on the movement today. So it is what it is. These are kind of things I took away. So, however you look at it, you can come to your own conclusion. But I love giving you stuff like this, so like you can stay in tune and up to date. So hit the notification bell for more videos coming in the future like this. And if you're looking to buy or sell, hit me up. My number right there. I'd love to help you. And Millie wants to say bye. She's like, we need to go on a walk, John. You've been at that computer too long. We will. All right. See you guys.